Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me for this segment, we have Clare Adelgren, Blockchain and Operations Expert at EY, to discuss blockchain technology as an ESG solution. Clare, it's great to have you with us. Welcome to TradeTalks.
Thank you. Good to be here.
You got it. Transparency in sustainability practices is no longer enough for consumers, businesses, and regulators. Real progress must be made and shown. How are companies navigating an ever-changing ESG landscape?
Yeah, so we are definitely seeing a trend towards governance that is sort of expanding this scope of non-financial reporting. So whether you look at the SEC and the proposed ruling on disclosures of emissions, or you're looking at the European CSRD, the messages are pretty consistent. It's really that, an organization can't simply be pledging carbon footprint reduction. Really, there's an increased need to be able to go much deeper and be able to explain how are we going to do this, but also importantly, how do we report on it? And it's not just governance, by the way. It's really an increased pressure from public scrutiny. It's coming from customers, it's coming from consumers. And so those organizations that are able to be able to share their quantifiable goals, they're going to benefit from the enhanced trust and this confidence. And I think it's going to impact their overall performance as a result of that.
How can blockchain technology serve as a tool to help companies close the gap between ambition and action in decarbonization?
Yeah, so I think whenever you apply a technology to a business problem, I think you always have to look at the characteristics of the problem. And when it comes to decarbonization, that problem is very much about transparency and trust and being able to share that across quite a disparate set of stakeholders and within the ecosystem. Now, blockchain technology has got very distinct characteristics and it really excels where there's a need for this shared data and a shared logic. And that's what delivers the transparency that would be needed for something like decarbonization. But also, its other distinct characteristic, of course, is immutability, right? And so that's sort of that underlying and building of that important trust, which is incredibly it's going to disseminate throughout this whole space.
And here's something I'm interested about. Can you tell me more about EOps Chain ESG solution and how it's leveraging tokenization to help enterprises drive better informed decisions on their ESG journey?
Yeah, so we launched our ESG solution earlier in the year, and it's an Ethereum-based API solution, and it's allowing organizations to better manage that decarbonization goals by tokenizing carbon emissions at the product level and allowing them to be able to track and measure and be able to show where they are against their carbon credit claims at the same time, so that you've got that full transparency that we've talked about. We've built it using the standards of the Interwork Alliance, and that's super important because it means that as organizations are tracking and reporting on their emissions, it's doing so using a sort of a built-in data standards that's going to drive this across the whole ecosystem. We're able to provide immutable reporting. Really this idea of an enterprise being able to show and demonstrate their current CO2 emissions, but being able to do that so that it's independently verifiable and through this integration of key emissions data validators into that process. And so really you're helping our organizations to be able to show and demonstrate this authenticity of their carbon emissions and their reporting, and make it transparent and to the ecosystem and to their ecosystem that they need to be able to demonstrate that too.
As businesses across industries are focusing on customer retention and market volatility, inventory management is one component in the supply chain that organizations need to get right. How can blockchain technology solve inventory management challenges?
Yeah, this is a really good one because I think that when you look and you think about inventory management and you think about large supply chains, you've really got to look at those handovers. A lot of the inefficiencies that's happening in those handovers, and it's data entry, it's inconsistencies, and that's expensive. And as it turns out, blockchain technology it's really good at eliminating those data entry errors. Why? Because you're standardizing information across all participants in one go. And so more accurate data from the supply chain means that you can run the same business network with less inventory and fewer shipments. Just as an aside on that, it just so happens if you look at what it costs in terms of CO2 emissions, what it costs to transport a container from Asia to the US, that's typically 4 tons, and it's about the same as 500,000 transactions on the Ethereum network. And so I think the chances are pretty good that if you can drive a really accurate blockchain-based inventory management system, you're not only going to get the benefits of the efficiencies from the actual inventory management itself, but you're also going to probably most likely you'll end up with a lower carbon footprint overall, even taking into account the carbon footprint of that underlying technology that's going to be supporting it. So it's incredibly impactful when you start to be able to run these sorts of applications at scale.
Beyond ESG and as blockchain-enabled transactions continue to gain traction, how is blockchain analytics reshaping operational risk management processes to improve management of legal, compliance, fraud risks?
Yeah, we're talking here, the sort of solutions that we've been talking about, these are all very much back office types of applications. And I think that if you take a look at what's happening in digital assets and the digital assets marketplace, we're going to see this increasing growth in offerings, increasing growth in the number of players that are in that place. And whenever you have that, you're going to need to increase your analytics to support those internal operational processes. And so this is really what we're seeing, is that there's going to be an increased demand to support the running of these businesses. And, our analyzer tool is a really good example of that. In order to be able to support the internal compliance, it can be risk management, it can be just the running of your business from the inside. I mean, you really need to be able to use the tools that are going to make it very simple, very easy for business users to be able to go and pull, reliable chain data into their business so that they can use that to verify and run the processes that they know and that they're going to need it within their organizations. And that work has got to continue. It's really a continuation of what you see within most large institutions today.
All right. Appreciate the insight, Claire. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thank you. Bye-bye.